73.61 and 73.01 in the past week. The huge portfolio inflows received in December triggered a strong up move in the rupee, but the domestic currency held the 73.00 stiff resistance level, at least for the time being. Rupee exchange rate is maintaining a firm trend due to dollar's weakness against the major currencies. Foreign investors have piled above $19 billion into Indian stocks in the last quarter to set a new record. The huge equity inflows ended the BSE Sensex to register an all-time high of 47,980.36 and Nifty 50 also registered a lifetime high of 14,049.85, and both the local stock indices have recorded successive 8th day of gains. India's forex reserves touched a record high of 580.84 billion in the week to December 25. Full stop. The forex reserves have increased by $123.60 billion in calendar year 2020. The whooping rise in forex reserves was the only single factor to prevent the rupee's rise beyond the 73.00 resistance. Rupee is the only currency in the Asian region to register a depreciation of just above 2.33% in the current calendar year. It is interesting to note the country's growth will enter the positive zone in the third quarter of the current financial year, according to RBI. Market players anticipate foreign fund inflows to continue pouring given the abundant liquidity in the global financial system. How far and how long the domestic stocks can hold the gains remain anybody's guess at this point of time. India's fiscal deficit is ballooning, and taking an optimistic view on the currency based on the huge forex inflows seen in the past year may prove to be a wrong approach to forecast the currency's trend in 2021. The higher inflation, well beyond the central bank's target of 2 to 6%, and the rising level of NPAs in the banking system do not augur well for the rupee over the medium term. India's current account surplus in Q2 of 2020-21 was up at 2.4% of GDP as compared with the current account gap of 1% of GDP in Q2 of 2019-20. The anticipated growth in the domestic economy by way of an increase in non-oil imports shall reduce the current account surplus significantly from the fourth quarter of the current financial year. The contraction in current account surplus will lead to an increase in dollar demand in the market, which could trigger a down move in the rupee at some point of time in the current calendar quarter. By allowing the rupee to rise and settle around the 73 level, the RBI has achieved to exhibit a lower depreciation in the domestic currency in the last calendar quarter. From the week opening level of 73.50, the rupee has appreciated by 0.60% in the past week. From the fundamental perspective, the rupee's depreciation in one financial year is based on the inflation differential between India and our major trading partners. As long as the domestic retail inflation is ruling in the 5 to 6% corridor, the possibility of the rupee's depreciation by about 4 to 5% on an annualized basis over the closing level of 31/12/2020 seems to be possible in calendar year 2021.